Hello and welcome to my official video number 1 of the Grand Gate Gardens continuous case study. If you're new here, check out the link below for more information. We will be following Grand Gate Gardens in real time, a week at a time. But this video number 1 is all about March 2025, as there are not a lot of transactions. And also we can chat about who Sara is and what you should do when you start a bookkeeping file. We'll even reconcile the bank without the bank feed, as I find that's helpful to know before getting to know the bank feed itself. Now, whenever I start a bookkeeping file, I go to the business's website to find out more about them. And I usually do this before I meet the owner for the first time, so that I can have a more informed and useful conversation about them and their business. Let me tell you a bit about Sara now. Sara Travell is the owner of Grand Gate Gardens and lives in Ontario, Canada. Sara saw that an old garden center lot was being put up for lease. It had a large old greenhouse that needed fixing up, a large shed-type structure that she could see used as a gift shop and a checkout area, and it also had a lot of space for buying and selling mulch and interlock if she wanted to expand. And she did. She had grand ideas. She loved growing her own plants and garden and had helped design and plant gardens for friends and family. Her wife Jane was actually working for a landscaping company, and as they talked about this new opportunity, the idea of Jane coming over and operating the landscape installation side of the business as the business grew was a really exciting thought. Sara decided to start the business out as a sole proprietorship. And as their revenues grew, and when they branched out into landscaping more than just gardens, then they would incorporate the business. So Sara got a quote on how much it would cost to fix up the greenhouse, and then she went ahead and she signed the lease. She would be on the property as of April 1st. But before this, she needed to register the business name with the Ministry of Ontario, open up a business bank account, and register for a GST HST account with CRA. So that's the background on this business. Before we dive in, the next thing I do when taking on a new business bookkeeping file is I start a reference sheet. Super handy when beginning to process the paperwork. Let's take a look at the one I created for Grand Gate Gardens. You'll get this in the initial setup download for the case study. So this is the entire Grand Gate Gardens and QBO reference page because for this case study, I did provide a section on when you set up the QBO file just for the case study and the QBO setup checklist. So this is a combination. But when I actually start bookkeeping for a new business, I do what I call the last four list. And the last four list is the last 4 digits of the different credit cards and debit cards that the business owners use, and the different accounts that I'm going to need to reconcile each month. And also I put in the business info. What's very important for me to know is what the GST filing frequency is, when the next one due is, all those things. It's important for me to know what the business owner's name is. And also in this case, it's helpful to know the spouse's name. And how the structure of the business is when I take it over. And lastly, what I find super important to know is the location address and the owner's home address. I need to know these both addresses. And the reason for that is business owners are learning a lot of things all at once, and they have it in their head that they can maybe claim business use of home, maybe. And so they sort of throw everything at their bookkeeper, who isn't always a tax preparer, right? An accountant and a bookkeeper are 2 different things. And so bookkeepers are used to taking the information and putting it into the system, and sometimes don't stop to look to see what the information is that's being provided by the business owner. And maybe the business owner will give the bookkeeper a utility bill. Well, now, as the bookkeeper, I want to know, is this utility bill for the actual business, or is it their personal utility bill? And what should I do with that? It's not actually all going to be business expense. How is it going to be managed? Talk to the accountant, the tax preparer, so on and so forth. So that is why I find it extremely important to not only know the actual address of the location of the business, but also the owner's home address. And for the reference purposes of this case study, I've always also put in these two assets. And something that I thought would help guide the case study is to go through the order of things to be entered. I usually start with the charges, do the bills, income, and so on and so forth. And here you can see that in March, not much is going on. You don't have to enter bills for March because there are no bills. So this is more of a guide for the case study. Okay, now let's take a look at March's paperwork. So when you open up the March file, you will have choice of the documents with notes and the documents without notes. It's the same set of documents, just one has like a little Gnome note on it. And let's open up this first one. Now this first one is actually a quotation. And so there is no bookkeeping that we need to do with this paperwork because it's a quote, it's not a bill. But as a bookkeeper, if this is given to me, I absolutely keep it. In fact, I keep it in a folder called quotes. And the reason I do this is because if I see a charge from Glasshouse Limited for $11,300, now I'm going to know what it's probably for. But it's important to know that I do have to go and actually make sure I get the bill from the business owner, because a quotation is not enough support in the case of a CRA audit or review. But having the quote on file can help, guide my entry while I wait for the bill, so I can keep moving forward with the bookkeeping. What's next is, okay, so this is the business name registration that Sara did with the Ministry of Ontario. She's just giving me all the things and she's keeping all the things. This is good. Notice that this business identification number is not her CRA business number. It is a different number. It's just a number that's assigned to the business name Grand Gate Gardens. In Ontario, Sara had to look up to make sure nobody else was using it. And then what she had to do was say, it's mine, I'm using it. And it lasts for 5 years. But there's no bookkeeping work that needs to be done with this. So we'll move on to the next item. So what we have here is the payment receipt from the Ministry of Ontario for that business name registration that we just saw. A couple of things to note here. You can see there's no HST. And that's important because so many people think there's HST on everything, and there isn't HST on everything. And we need to see the source documents to know what the tax is. Another thing is it doesn't know what credit card was used to pay. And that's frustrating because a bookkeeper always needs to know how it was paid. So that's a take-home point right there. If you're somebody who's supplying paperwork to a bookkeeper, make sure you always write down how and when it was paid, if you can, because that's what the bookkeeper needs. Because right now, I'm looking at this and I'm like, well, I know Sara uses her personal credit card sometimes, and I know this is very in the beginning, but does she have her business one set up yet? And how is this paid? So I have to stop before I can enter it. And I have to go look, do I have the credit card statement? Is it showing up on the bank feed yet? Is the bank feed connected? Like, these things take time. Remember, we want to avoid double work and wasted time. So here is my biggest hack. My biggest hack for any business owner starting out anywhere is you want to get a magical card. Yes, a magical card. Because if you have let's say you have a personal credit card that you just have sitting around in case of emergency and its balance is 0 and there's no pre-authorized debits on it. Take that credit card and say, this is my magic business card. And it's a magic business card because if you commit to only putting business transactions on that credit card and no personal transactions on that credit card, now you have an automagical list of every business transaction, whether you have the paperwork or not. Okay. Yes, paperwork's important. I've already talked about why, and also, you need it for if you're audited or reviewed. But at the end of the day, you still want a list of everything, right? And if you have a card that's dedicated to just business, you don't have to do anything. It's magically made for you, right? That is my biggest takeaway. In fact, right now, if Sara had said to me when I took her on, and by the way, everything is just paid with my business credit card no matter what, I don't have to stop and think. I can just automatically enter this as paid by business credit card and I go quicker. Makes bookkeeping much, much easier. So Can you tell that's a really important issue to me? It really is, because people don't realize how much time and energy it saves. Not only that, what if she had forgotten to forward this to her Dropbox or her Dext? What if it got bounced because it wasn't readable? What? Then we wouldn't know about it and we would miss entering it into the system. So not only by using a personal credit card now and then, your personal business account now, or your personal bank account now and then, are you losing magic, making making things take longer, but you're also risking missing things. So I just don't. Anywho, let's see what Sara did. So for purposes of this case study, I did note that actually Sara used her personal credit card for this. So let's go ahead and enter this into QuickBooks. So when it comes to entering expenses into QuickBooks, I'm going to have two terms that I refer to all the time. One is going to be charges and one is going to be bills. A charge is when, an example of a charge is when you go to Staples and you buy something with your debit card for your business. So your office expense goes up and your bank goes down. Same day, right? The example of a bill is if a supplier were to bill you for something on one day and then you pay for it another day. And so you have two dates now that you have to track, the bill date and the pay date. So that's when you would put in a bill and a bill payment, two different transactions. Another thing to note is it could be a bill paid the same day, but if you're using checks, it's very helpful to keep track of the check numbers as well as the bill numbers. So even if it's paid the same day, a bill with a bill number and then a payment with a payment number is an example of a bill entry and a bill payment entry. So we've got charges and we've got bills. When we go into QuickBooks and we say new, we've got these three options. An expense, that's a charge entry. That's when you use your debit card or your credit card, and that's when you would use the expense entry screen. And here's the bill. And again, the bill entry screen, it's going to increase the expense, but then it's also going to increase accounts payable, the balance that you owe to somebody else or to that vendor. So that's what the bill entry would do. And then you'd have to put a bill payment entry in to note how it was paid. Now the check is, we can talk about that a little more another time, but just a quick rundown is that it basically is like an expense entry, but you can only hit up the bank, but you can print it like a check. So that's why it's useful. But I'm an after the fact bookkeeper. And so if I were to enter in an expense that I thought was paid by the bank as a check, and then find out later is actually paid by credit card, I can't change it because the check entry screen only allows the payment method of a bank account, not of a credit card. So I'd have to delete it and re-enter it. And again, we hate double work, so let's not do that. So basically, the expense entry screen is for charges and the bill entry screen is for bills. This is a charge because it's the bill date is the same as the pay date and there's no check number to track. So it's a charge. Let's go ahead and put in the Ministry of Ontario. I've imported the vendor list in already. And we're going to say that this was paid by Owner's Bank or CC. Again, I've talked about how I don't really think that it's helpful to pay things with your own, the owner's bank or credit card. But when it happens, we have to deal with it because bookkeeping is really, at the end of the day, just representing the reality of what happened. That's really what bookkeeping is. And so in reality, they use their bank or CC. And then another thing I like to do is this is a Naomi thing, is I put down here in the memo MC7650, because I know that's how it's paid. And the reason I put that in is if that owner comes to me with their personal credit card statement with all of the business things circled, yes, that happens, I can go ahead and just compare it to the list of Owner's Bank or CC and sort by memo. And then it's just a quicker way for me to check. You know what? I just said bookkeeping is all about representing reality. And another thing about bookkeeping is basically we're just comparing lists, making sure we have everything, reconciling, making sure everything matches. So that we represent reality. So I guess that's full circle. Anyway, so let's go ahead and put in the payment date of March 14th, like this. I could just go 314 and tab. And then, because I have it set to month, day, year. And again, I'm just going quick payment method. We might want to put in this reference number or not. It's not super helpful, I don't think, but there it is. The category, this one would be business fees. And you could put in the description, but it's, why? Like it's $60, Ministry of Ontario, business fees. I feel like the description is only useful if it's weird or questionable, or you need crumbs for later, or it's an asset or an equipment. Equipment, asset, tool, that's important to put in there. And if it's weird, but this isn't weird, so I'm just going to skip it. We're trying to go quick. And it is exempt, say. And we'll talk about the different sales tax options later. And we'll talk about this amounts are exclusive a little later. But there we go. We're going to go save and new. Okay, let's take a look at what the next one is. The GST registration. And again, there's nothing we really need to do with the bookkeeping right here. We've already set up the HST account. It's just nice to keep this on file. It's nice to know when the next filing is due. Also important to note, if this starts March 14th, and if there was a business expense that was dated before March 14th, technically you can't claim the ITC, you can't claim the HST credit on that because the business wasn't registered. There are ways to backdate it if you bought a piece of equipment or asset or inventory, but that is not a discussion for today. I just thought I'd mention it. We'll come to the deposit slip later. If you look in that cheat sheet screen, I say first enter the charges, then the bills, then the deposits, and then reconcile the banks. So we'll come back to that. But while we're thinking about expenses, let's take a look at this Gnome Hardware. So this Gnome Hardware receipt right here, it is paid, look, it tells me it's paid by 5642. And we can just go and take a look at our reference sheet and see that 5642, that's the business debit card. So right away, I know that this is paid by the business bank. And doesn't this look like a bill, right? Doesn't this feel like a bill? It's big, and so we think this is a bill. But remember what I said about bills. They are expenses that either are paid at a later date or have like a check number that we want to track. And in this case, it was paid by debit. It just is a big piece of paper. Just because it isn't a little receipt doesn't mean it isn't a charge. This is just a charge entry. So let's go ahead and put that in. So I'd said save and new, so Gnome Hardware. And it's not paid by the owners, it's paid by Canada Bank. That's Canada Bank Chequing. And the payment date was to the 27th. So I can just click that. And now I'll put this reference number in because, I like to have all of those bill numbers in. And then the category. So what did she buy? She bought potting soil mix. Okay. So that's a type of, cost or supply or purchase. So because she's going to be selling flowers that she grows, I'm going to consider this a cost. The difference between a cost and an expense, they're kind of the same thing insofar as they both reduce the taxable profit, right? Like income minus costs and expenses is your taxable profit. So it's not a huge deal if you get it wrong, whether it's a cost or expense. But if you're going to analyze your financials, seeing the costs separated from the expenses is actually really helpful when you're analyzing your ratios, because a cost is something that's incurred because you're making the product or service. And if you weren't making the product or service, that cost wouldn't be incurred, right? Advertising, that's an expense. You can advertise all you want and not sell anything, right? If you're a landscaper and you're installing brick, well, obviously the brick is a cost, because if you didn't have that job to install the landscaping, you wouldn't have the cost of the brick. So that's the difference between a cost and expense. And you can see it kind of like overlaps a little. We'll talk more about that later. So I'm going to just type in COGS here, and you can see that I have purchases and materials COGS right here. And here we're talking about the amount. This is the pre-tax amount right here. And if you have this amounts are exclusive of tax option, that means that this amount box is the pre-tax amount, 405.75. And we'll just say H for HST. And so, that's a big number, eh? 405.75, much better. So if we scroll down on this bill, we can see that the total is 45850, and the HST is 5275 right there. Just another note, GST and HST both go to CRA, so they are GST HST. So if you see GST here, you can put it towards your HST account. But if you see PST or RST, that is not GST or HST. So GST, HST is kind of like they both go to CRA, they can go in the same bucket. So, and you can just see that it actually is HST, is just that the home hardware receipt that I doctored to make unique for my case study, they haven't updated their system. Their system is the one that said GST, and I got this in Ontario. Anyway, so GST, HST, same thing. So here we go. We've got it in, and that's all we need to do. We're going to go save and new. And let's go ahead and see what's next. All right, so the next thing there is the bank statement and the deposit slip. All right, so let's go ahead and open up this deposit slip and take a look at that. So this is a manually created deposit slip sort of to be printed out and used by Sara. She decided to not buy the deposit slip book from Canada Bank. She thought it was too expensive and she'd just rather print her own. And this is really all you need for a deposit slip. In fact, I even have a spot here for the teller stamp, but there's usually no Gnome note, where the teller can stamp it and say, yep, it's gone in. And they will on these ones that you can print yourself. I just made this up with Excel and have it as a, you can actually download the Excel and the PDF from my website. Of course, it's not going to say Grand Gate Gardens on it, and then use that for your business if you want. Not every business owner uses deposit slips, and that makes life hard. Remember, right? Don't make double work. Then I have to stop and have to figure out what's this 20,000 deposit. I have to call her or email her. I have to stop. Don't make me stop. And also, you're not going to remember. The business owner isn't going to remember, right? Like they think they do, and they've got so many things happening, right? So always, always use a deposit slip, even if it's something simple like this. And what is this? It's her first deposit into the business bank account. It's $20,000 of her own money. That's all. She's just getting herself started. So let's go ahead and put this into the bookkeeping. So in this case, we're going to go new and we're going to go bank deposit. So here's a caveat here, and we're going to learn much more about the bank deposit. Going to be two sections. There's going to be a section where you receive payments from your clients, and then there's going to be this section below. And right now, because we haven't put any payments in from clients, there's nothing at the top. So this is the caveat. Only use the add funds to this deposit section of the bank deposit for things that are not related to sales. All right. And I will tell you more when we talk more about the deposit screen. But like petty cash deposits, owner's contributions, grant deposits, you can put grant deposits in. These are the sort of things that you can do. Moving money from, say, a clearing account over to the bank. All wonderful uses of your bank deposit screen. Receiving money from a client? No. Anything related to sales, you want to use the sales interface only. Trust me on this, and we'll dig into why later. So right now, this is just straightforward though. We've noted that the payment account is Canada Bank Chequing. Let's make the date March 25th. And we got this from Sara. And the account is owners draw contributions. And again, you don't need one for draw and one for contributions. It's how much the owner is putting in and taking out. So one GL account is fine. Also, if this was a corporation, you wouldn't have the owner's draw contributions as an equity account. You would have a shareholder loan, a liability account, which tracks how much the shareholder puts in and takes out of the business. But this is a sole prop. And we're going to scroll over. And I'm just going to say 20,000. This is the only parts that are important. Now, this is a very important thing to discuss right now, is the differences between all of these sales tax options. When we were in the expense entry screen, the only ones you saw was 0 rated, and it didn't say purchases. And exempt didn't say purchases, out of scope, and the HST and the meals. It only gave the purchases options, and it didn't say purchases. It's like, you're in the expense screen, obviously this is a purchase. And so then when you're in the sales screen, right? Oh, this is a sales screen, so obviously this is a sales. So you're only gonna, if you select any of these, it'll automatically assume the sales and on a sales entry screen. So if this was actually an expense that had HST in it, then you would need to make sure that you chose the HST on purchases, not the HST on sales. Very important, and we will revisit why in a later week. For today, we're going to discuss the zeros. Okay, so the difference between these zeros are very, very important. I'm going to illustrate why for you right now. First of all, let's talk about the three different zeros. You have zero rated, exempt, and out of scope. First, let's talk about zero rated and exempt. Very different. If you rented out the basement of your house, you would not be able to register for HST because the rent that you're charging is exempt of HST. Like no sales, like it's not like you can't claim the HST on the utilities related to the income that you get from your rental income because the residential rental income is exempt from HST. So you just, HST sales tax just isn't a thing. And like I said, this means because it's exempt, you can't actually claim the credits on the HST on the expenses related to that income. So when you think about other things that don't have HST on them, think of eggs, honey, stuff that farmers make for us. Those are actually zero rated. And the reason that those are zero rated is because it is eligible for the HST credits on expenses to be repaid back to the farmers or the zero rated supply business owner because they can register for HST and they are collecting zero HST. And because they're collecting zero HST on their eggs and their honey and their wheat, that means that they can register for HST, say I collected my zero, and also I've paid this much money for the expenses for running this farm and generating this income, and they do get the HST back that they paid on business expenses. So that is the difference between exempt and zero rated. When it comes to entering expenses into QBO, doesn't really matter whether you say zero rated or exempt because it's more about the sales that it becomes sort of more important. But then what does out of scope mean? Out of scope says this has nothing to do with expenses or sales at all. That's what out of scope is. And let me show you what that looks like when this is entered incorrectly. First of all, the correct way, just so you know, we'd say out of scope, whether it's sales or purchases, because it's got nothing to do with sales or purchases, it actually doesn't really matter because it kind of bothers me that QuickBooks has that. It looks pretty, I suppose. So we'll just say, out of scope. So this is the right way of doing it. What would happen if we did it the wrong way? Okay. I'm going to say that this is just zero rated sales. That's what I'm going to say because that's the first one that comes up and a lot of people might just assume that's fine, there's zero. But because it says sales in there, let me show you what happens. I'm going to go save and close. I'm going to go over to the taxes, to the sales tax, and I'm going to pull up this return that it's working on right now based on the information we have in already. And look, sales and revenue, $20,000. Because we said this is zero rated sales. We didn't say out of scope. So this is going to screw up your HST filing if you say it's zero rated or exempt. Exempt would put it in there as well. Just a quick way of seeing, you can't click on it from that view, but if I drop this up, save view summary, now I can actually click on that 20,000 like this, and we can see that it is this deposit right here that we did. And this is not going to show up on your profit and loss, right? This is going to make your line 101 sales on your GST return different than your profit and loss. And you would think that because we said it's owner's draws and not sales, it would know not to put it there. No, that's not how it knows. Because there's so many rules about it. Like this is how it knows. It knows because of what you say over here on the sales tax. Okay, so that's why it's super important. And this is the correct way to enter it. Out of scope. Purchases or sales doesn't matter because it's neither. It's out of scope. All right, there you go. Save and close. Excellent. So we've got that. Let's just go home and let's take a look at what's next. Last of all right, we've got the Canada Bank checking account statement. Awesome. So here's the Canada Bank checking account statement. And now let's go ahead and reconcile the bank. So if we go over to transactions, some people might want to first go to bank transactions. We're going to start up the bank feed in April, but the bank feed is not the bank reconciliation. And we're going to start talking about the bank feed in the next video. So right now, we're just talking about how to reconcile. So let's go ahead and get started. Let's get reconciled. That's I like how it says that. What is the opening? So we're doing Canada Bank. Beginning balance is 0. Check it out. So let's make sure that is the case. Look at that. Beginning balance is 0. And here we go. And we can see here too, opening balance, total deposits, total withdrawals, and closing balance. And that's what we're going to do right now. And so the ending balance is 12750.51. I'm going to say 0.50 just to illustrate something, but you would put 0.51. And this ends on March 31st. Scroll down and start reconciling. Okay, so I'm just going to make this a little bigger for now. And so you can see that we only have these 2 transactions in. Let's take a look at the bank statement a bit bigger as well, like this. So the first thing we see is the 20,000. And we can click that off. Done. And a lot of people at this point would put a little check mark next to the 20,000. I don't. I usually have it beside me and I pull my finger down and I check, pull down. And then when I come across something that isn't on the list, I'll just circle it on here because the circles are what I don't have, but that's just my own method. The next thing is 6780, and that's not on there, so that would be something that I circle. Next, we have that Gnome Hardware debit purchase for $58.50, and you can see we have that, so we would click it off. And coming back, the next, so remember I have a circle around the 6750, or we can highlight it. Oh, you know what? Highlight it. I'm highlighting that because I don't have it. We got the $458.50, and then the monthly fee, we were just there, it's not there, so let's highlight that. So these are the items now that we need to add into the bookkeeping. Monthly fee, that's pretty easy. Let's just go ahead and pop that in, 1099, March 31st. Right from this screen, I'm going to say, and I can leave this, just go somewhere else and come back. It's good to know. And so we, who's the payee? Canada Bank is the person who's charging us. It's being paid by the Chequing. It was March 31st. And I'm just going to skip all that and just say bank charges, 1099, exempt. There's no HST and bank charges. And we're going to go save and close. And brings us back to where we last were. I can click this off, go back to here, and we can unhighlight that. So now we're left with the 6,780. Now, Sarah didn't give us any paperwork for this, but we do have the bank statement, and it was a check. So again, it kind of slows us down right now that we have to stop and look to see what it is, but let's go take a look. Here's the check, and the check is to Potts Properties, Inc., and she put a memo in, so memos are awesome. And the memo says April 2025 rent and last month, so like first and last, for the 465 Main Street property. So this is the property that she's renting. So it would be important to have the lease agreement if ever audited by CRA. But as this is a commercial property, I know, and they're incorporated. So again, it's a commercial property, but if the person who owned it wasn't registered for HST because the sales would be less, or the revenue would be less than 30,000. Again, it's always good to see the source paperwork. But in this case, that's perfectly divisible by 13%, and they're incorporated. So all that, there's a high degree of certainty that there's HST on this. So let's go ahead and put that in. So your gut would be to put in a check, right? But at the same time, let's take a look at this check for a moment. It's dated in March 25th, and it clears March 26th, and it's for April rent. And as a bookkeeper trying to represent reality, I want to put the April rent expense into the April expenses, because I like to look at the profit and loss month over month to see what the monthly incomes and expenses are. If I put this expense in March, even though it's April's rent, that's going to kind of mess up my month over month income and expense analysis. So I don't put this in as a check, right? I'm going to put this in as a bill. So let's go ahead and put this in as a bill. So we're going to say new bill, and we're pots, properties, and the bill date is 0401. It just happened to be, it's paid at a different date. It's not after, it's before, but it's still paid at a different date. And I'm going to put this in as first and last rent. And then the category is rent expense. And I'm going to say April rent right there. And it is, so if you take 6780, well, here's a few steps. First of all, let's change this to inclusive. And let's say 6780 tab HST. And what we can see is, even though it says subtotal, this is actually the subtotal over here, is $6,000. So if you back out 13%, it's $6,000. If this is first and last, therefore rent each month is $3,000, right? So this is what I am inferring just from seeing this check. But April rent is not $6,000, right? April rent is $3,000 plus HST. So just to make my life easier, I'm going to say exclusive, and I'm going to say $3,000. Excellent. But the check payment includes last month's rent. So let's go ahead and put this to prepaid expenses, like that. Last month's rent at 465 Main Street. Now, the reason I put this in here is because when we're looking at the prepaid expenses on the balance sheet, okay, it's going to stay there until we resolve it somehow. And so we will resolve it when the last month is being stayed at 465 Main Street. So having this, we're not going to remember, like we might not remember that in like how many years? 5, 10, 15, 20 years, right? So you want to have these little crumbs to help you know what the prepaid expenses are. Now, some people will create a sub-account under prepaid expenses to say prepaid rent. So that's also an option. This is my method. And we can, every business is different, and both methods work. That's the one thing that you'll find about bookkeeping is everybody's looking for rules. They're looking for black and white. It's less about rules and more about principles, right? There's more than one road to Rome. We want to choose the one that works best for us. Okay, so we're going to say 3,000, and we're going to claim HST on that also. So there we go. We're going to hit save. Now watch this. This is the first time we've entered a bill together. This is before it's saved, what it looks like. Under here, there's nothing. I hit save. Watch. Boom. Make payment shows up. So let's go ahead, make payment. And look, now it's like it looks like a check entry screen because you have this print later if you were going to print checks, but I'm not going to. You could also print it right from here. You don't have to print later. But again, we're doing after the fact, so it doesn't matter. And then the payment date is March 25th. And we're going to go save and close. Oh, Canada Bank checking. Did you see that? We make sure we marked the right bank account, it defaulted. And here we go. We can go ahead and click off this last one. Boom! But it's not zero. And that's because I left a plant. I made that a penny off. Always when I'm off, the first thing to do is I make sure I haven't made a typo. So let's go ahead and you can fix that through this edit info button right here. I'm going to back that up, and I think it ended in a 1. We're going to hit save here. There it is. We get our big green happy 0. So this is your introduction into what a very simple bank reconciliation can look like. You can imagine that if this listing was 1, 2, 3, 4, 15, 20 pages long, how horribly long it would take to do a bank reconciliation when you're just putting in manually entered transactions like we're doing now, okay? Because you're going to make typos, you're going to make, like, maybe you'll say it's posted by the savings and the master, like the payment accounts might be wrong. It just takes a really long time to do. The bank feed helps reduce how long the bank reconciliation takes because it puts the priority on making sure things are entered correctly before you get to the bank reconciliation. And it also helps with these little circles. We don't have to go through and check them. The bank feed helps us with that, okay? So we're going to talk about how the bank feed makes us much better at doing bank reconciliations, much more efficient and much quicker. But in order to use it correctly, you have to understand first how to do a manual bank reconciliation. I mean, you don't have to, but I think it just makes it incredibly easier. The basics of a bank reconciliation are, it started at 0. There were 3 things coming out, 1 thing going in. So if you take 0 and you take minus the things coming out and you plus the things coming in, you say the bank statement should show 12750, and the bank statement does show 12750, and so the difference is 0. Like, that's the basics of a bank reconciliation. And you can imagine if this check was written but not cashed, it wouldn't have a circle. So and also this balance would be different and we would still reconcile. So we'll talk more about cleared and uncleared and the bank feed, but here is a manual bank reconciliation for your enjoyment. So let's just have a quick glance over here at our checklist. We've entered the charges, we've entered the deposit, and we've reconciled Canada Bank checking. So before we say that this is done, we go to look at our reports. So we'll go to the profit and loss. Between the profit and loss and the balance sheet, all of the general ledgers accounts are represented. The profit and loss I describe as how much so far. So you can see that there are 2 dates. We're actually just going to bump this to March 31st, run report. And I'm going to split it into months. I always like to look at the last 3 or 4 months just to see if anything jumps out weird. This is the first little bit, so there's nothing really to jump out. But you can see this is where our income, so that's not showing yet, there is no income. And our expenses are, right? Our costs and expenses are. So how much so far? Between January and March, how much was our incomes and expenses, and what is our net profit? So that is the profit and loss report. And then the next one we're going to look at is your balance sheet. There we go. Standard reports, balance sheet. And let's just make this March 31st. So even though there's a from and to here, that's if we were to click in to see what was going on in this, all of the transactions. If we had March 1st to March 31st, it would only show us March, but if we have January to March, it shows us all of those. But you can see the actual report is just one date, as of March 31st. How much do you have as of March 31st, and how much do you owe? And that's what we're looking at right here. And you can see how accounts payable is negative? That's because we had a prepayment for an April bill. So it jumped out at me, but it makes sense. There's HST, there's the owner's contributions, and the profit is a loss. And let me just click on this. Guess what this is? That's your profit and loss. That's how it all ties together. That's how everything balances, right? So if you have an expense that went up, like the increased this purchases by 500, right? That means over here, your bank would go down 500 and your profit would go down 500. And that's how everything balances. Your assets equal your liabilities and your equity. So that was a quick little crash course on the financial reports. Oh, and also profit and loss. The other name of the profit and loss is the income statement. It's the same report, it just has 2 different names, or statement of income. So profit and loss, income statement, statement of income, they're all the same report, just different names. So that concludes my first video in the Grand Gate Gardens continuous case study. Even though there were only a handful of transactions, it surprisingly covered a lot of information. But this information is the foundation in which you will increase your understanding, speed, efficiency, and accuracy. By seeing how bookkeeping works, you will be empowered to implement real-life processes like having a magical credit card create automagical lists with digital processes. And if you want to see this March 2025 done using document syncing software such as Dext, that's next on my list to share. I hope you found the information helpful in the building, growth, and success of the business you are working in and on. If you have any special requests for topics you'd like me to cover in upcoming weeks, you can find out more information in the link below. If you found this video useful, don't forget to subscribe to my channel. I'm also on Instagram at BeThatBusiness, and you can tweet at me, X at me. I'm at Nifty Gnome, and I'm also at Nifty Gnome on Twitch and TikTok. And you can find resources and courses about running a Canadian business on my website, naomiwilkins.ca. I love making business make sense. The video today was recorded in beautiful Newcastle, Ontario. Thanks for watching, and get out there and be that business that thrives.